There is a banking system operating right now that holds more money than traditional banks. It has no deposit insurance, almost no regulation, no central bank standing behind it, and most people have never heard of it. It is called shadow banking, and it was the hidden engine behind the 2008 financial crash that wiped out trillions of dollars of ordinary people's wealth. It is bigger now than it was then. What is shadow banking? Shadow banking is not illegal. It is not a conspiracy. It is simply financial activity that looks like banking lending money, creating credit, taking on risk, but happens outside the regulated banking system. It includes hedge funds, private equity firms, money market funds, mortgage companies, and certain parts of the insurance industry. Together, the global shadow banking system controls an estimated $63 trillion in assets. That is larger than the GDP of the United States, China, and the European Union combined. And almost none of it is subject to the same rules that govern the bank where you keep your savings. How it caused 2008. Before 2008, shadow banks had created an enormous machine built on mortgage debt. Traditional banks would issue mortgages, then sell them to shadow institutions, who would bundle them into complex financial products and sell them to investors around the world. Each step moved the risk further from view. Nobody knew exactly where the danger was hidden. When US house prices began falling, the entire chain collapsed simultaneously. Bear Stearns failed. Lehman Brothers collapsed. Credit markets froze worldwide. The shadow system had amplified a housing problem into a global catastrophe. Governments spent trillions bailing out the consequences. The shadow banks themselves faced almost no criminal accountability. Why it is more dangerous now. After 2008, regulators tightened rules on traditional banks. So financial activity migrated further into the shadow system, where rules were looser. Private credit, loans made by non-bank lenders, has exploded to over $1.7 trillion globally and is growing faster than any other financial sector. These loans are not publicly traded. They are not transparent. When they go bad, nobody sees it coming until it is already a crisis. The IMF and central banks around the world have repeatedly flagged shadow banking as one of the top risks to global financial stability. Not because it is illegal, because it is invisible, until it is not. What this means for you. Your pension fund likely has exposure to shadow banking assets. The mortgage market that sets your home loan rate is partially shaped by shadow lenders. If a major private credit fund or hedge fund collapses with enough leverage, the ripple hits regulated banks, then stock markets, then your retirement account. The 2008 crash did not start with a bank run. It started with a hidden system that nobody was watching, until it was too late. That system is still there. It just has a different name and a different product. Understanding this does not mean living in fear. It means understanding that the financial system you see is not the whole system. And the part you cannot see is always the most dangerous.